Welcome, everybody. Excitement today for autonomous driving technology. Trump administration may have leaked stuff out to the media about wanting to expand autonomous driving, and that, of course, would be beneficial for Donald Trump's bestest pal, Elon Musk, and Tesla. So interesting. If we take a look, Tesla up today about 5.5, almost 6%, right? So the question is, do we buy Tesla on that news, or are there other opportunities? And I think there are other opportunities versus buying the breakout today in Tesla. First off, Uber. Uber got pounded, and Uber's getting pounded. You'll see this chart in a second, and it's down 7% on that news. And here's the interesting aspect. Back on October 9th, right here, that's October 9th, and we've got an alert that just went off. October 9th, Elon Musk had his conference and didn't really mention a whole lot about autonomous driving technology. And people were a little disappointed, but shareholders of Uber said, hey, look, no competition. And then the next day they gapped higher, and that created the new wave high in Uber at 86, and everyone got real excited about it. Odds are that people said, well, I'll buy some, maybe I buy the dip, and they bought the dip. And now it got a lot dippier. So the question is, are those folks that maybe bought the excitement news, and I want to share with you what you're looking at from a technical perspective. There are three of my favorite indicators. Person's pivots, and that's the red line. These happen to be monthly pivot point analysis, and that projected the resistance target for Uber. So people that maybe woke up to that headline news that, oh, Elon Musk isn't improving in technology in autonomous driving. It gave Uber traders the edge, or maybe the ambition to buy it. But unfortunately, they bought at a predicted resistance. And we're going to get into this in just a quick, I'll go over it right now. When a stock and you use person's pivots, it helps to detect the trend of the market, whether it's bullish or bearish, with higher projected highs and lower projected lows in a bear market. So if the market's bullish, it'll target the next time periods higher high. Green is support, so higher high, higher low, higher high, higher low, until things start to break down, as it did back here in April, broke down. So at this point, people bought at a resistance. First off, never buy resistance, wait for a pullback. Okay. Next, does a stock, is it liquid enough, or does it trade not fluidly enough and respect the technical indicators? So basically throw up an indicator and say, how does it work? If you're using any technical tool, double check to see if that particular stock or instrument or commodity you're trading respects the pivot points. As you can see, going all the way back to last year, Uber respected the monthly green support levels. It respected the green support levels in January. It respected the pullback all the way in here. This support, it didn't work. It was in a downtrend. It was targeting a lower high, and the green, it was targeting a downtrend. Then in August, it came all the way down to that respected green support level and just took off like a bat in hell. That August low was the dip that was made on the comments by the Bank of Japan, who thought that they may need to raise rates, and the whole carry trade unwound. If you remember that, it caused a big debacle in the overall market. But Uber did respect its monthly targeted support. Now let's fast forward and go over here. Here's the next big support target. It's around 65. You can see it right there. It's 65.62. So support is between this old low where it held on the pullback from the August low, pulled back there, down to 65.62. So I'm looking at establishing a small light position on this dip, because I think this news was more or less overreaction to the autonomous driving news from the Trump administration. First off, he's not going to be in office till January 20th. First off. Second off, Uber's going to have a lot of business with not only their freight aspect, but not to get into all the details of Uber, but I do believe they're having a pretty darn good quarter currently, which will reflect in next quarter's earnings statement. So buying dips in Uber, I think, makes sense based on this news. My biggest concern is this gap level right in here. This created what we would call in technical analysis in candlestick lore an abandoned baby. In old chart patterns, we would call that an island bottom. Very bullish. eventually that gap is going to want to get filled. My supposition is it goes down first, giving us a short-term trading opportunity to the upside, and that gap might get filled sometime later in the future, maybe next year, as more news is developed and more legislation is written to pass from a federal perspective under the Trump administration. So for me, I'm a buyer of Uber down here, and I think we can use some tight stops, less than 3 to 5% down, and beyond that 65, 62. Another thing is we'll be watchful to see if we get any later this week. We'll watch to see if we get any uptick in unusual volume activities. So be unaware of that. I would watch the December 20th and also go out to the January option expiration, targeting a move back up to minimum for Uber 70, 75. All right. Now, other news that came out of this autonomous headline news today was Mobileye, MBLY. Mobileye is up approximately 10%, 11% today. It was up a little bit more, and that's a big move. Most people, look, 10%. But folks, it's up 10%. That's great. But last week, it was at $17. It's not even back to where it was last week. More importantly, Mobileye was trading around $32 back in, as you can see, June. So this stock has really gotten crushed. One of the investors in Mobileye, and again, this is a company that has the technology for the sensors, and it takes the data, and almost every car manufacturer uses Mobileye product. But Intel, you might not know this factoid, Intel has about just under a 10% stake in Mobileye. So my 2 cents is I like the pattern here in Mobileye, whether it's autonomous driving, whether it's now Tesla did not use Mobileye. They did, but they started their own product, so they don't use Mobileye. But if autonomous driving does increase under the Trump administration, or regulatory pressures are alleviated, allowing and paving the way for more expansion in auto driving, so to speak, Mobileye will benefit from that, number one. The other company that's going to benefit is this company called Google, Alphabet. And they have a company, as you guys know, Wham. I'm probably not. It's Wham. It's not Whammoo. That was a bank that went out of business. Waymo. Waymo is the autonomous driving arm or subsector of Alphabet, and Alphabet should benefit from this. Google. Now you can use Google. I use Goog. Either way, does it respect the monthly pivots? At times, more times than not, it really does respect the pivots. And what's interesting is that the person's pivot indicator is projecting a higher red than last month, higher green than last month, and it is in a path of upward projection. The only bad news about Google right now is the volume indicator here, the momentum of the volume, percent change of volume overall is declining. Now, I would say maybe we give it another day or so and wait for that, but I'm already in Google. I'm in February upside call spreads because I look at the longer term, and this is what I wanted to share with you. I look at the longer term, the weekly momentum of volume. People have been acquiring positions in that. Now let's go drop down and go up a time frame and go to the monthly analysis, and you can clearly see the monthly momentum is positive. So it's in an uptrend. It pulled back, and it's one of the very few of the MAGA 8 names or 7 names that actually has decent volume on its higher time frame. So I think that Google's one, besides YouTube, ad revenue, besides autonomous driving, it can also just overall benefit as we head into the new year. So I'm a big fan of Google here from upside, and it is an expensive stock, so you probably want to look at bull call option spreads. And I would go all the way out even into February, where the 190, 210. Now you think about it, that's a 20 wide spread, can be done for around $400. And if you just go back and take out that high and get into the $200, that's going to be a pretty decent profit potential, high probability, and you can manage that trade. But overall, Uber, I think, just to summarize, Uber is coming into some near-term support on the person's pivot at that 65 and change. And I think you got a dead cat bounce tradable low that you can take in the next couple days if we get down there. Thanks for watching. And as always, If you like what you hear, give a thumbs up. I always like to explain, how do I trade with my indicators, and what am I looking for, and what opportunities would I take between maybe trading the stock or options, and that's what we post on our YouTube video. Thanks for watching. Have a great rest of your trading week.